Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Welcome back to a new week. As you probably saw last week, there was some unexpected volatility, and we kind of were expecting the week to be a little bit neutral with very little news, and then bam, Fed comments came out last week as Fed members were speaking throughout the country, and really they were shedding some light that they have to move a lot more quickly than they were expecting, which of course everyone considered bad news, and it kind of is bad news because that means we're probably going to see a sharper interest rate increase for the Fed short-term rate, and they're also going to have to back themselves out of the market quicker than they were expecting. So over the last 18 months, we've been talking about the Fed participating and buying $120 billion of bonds every single month for well over a year. Well, now that all has to get unwound, and that means that all that risk is being transferred back onto the open market, and the open market is already pricing that in. So you've seen a steep increase in some of the yields that we watch as far as treasuries are concerned. And what that really means is that the mortgage-backed security market is going in the same direction. Rates have been going higher pretty quickly, and unfortunately for some people, it's putting a lot of price pressure on what they can afford, what their monthly payment looks like, and even what their locked rate looks like today versus just 30 days ago. So coming into this week, there is a lot of, I'll say, pensive feeling around what's going to happen in the mortgage rate market, because as the rates continue to go up, what happens is affordability goes down. So over a longer course of time, that eventually puts price pressures on real estate. So we've seen these elevated house prices for well over a year. Home equity is at the highest it's been ever for a lot of people. And up until the last couple of months, mortgage rates were at their all-time low, some of them all the way even down into the mid and low 2% for fixed rate 30-year loans. Well, that has dramatically changed because of all these aforementioned pieces I'm talking about today. And what is really happening is that the mortgage market and real estate is going to have to react and then kind of reset itself to figure out, what does this mean? So buyers are asking themselves, where do I want to buy at? What am I going to be capable of affording on paper, and then what am I willing to spend? And then sellers are going to, on the opposite side, make some of those concession questions as well. What am I going to do with my house as far as how it's priced, how it's marketed, and then how long is it going to be on the market? What you're seeing right now is a lot of shifting and maneuvering between buyers and sellers, and definitely the landscape of real estate mortgages has changed dramatically just in the last 30 or 60 days because of all this. And we haven't even mentioned yet inflation, we haven't mentioned geopolitical stuff, but those are also going to be weighing in as factors that we need to be looking at in the market, not just this week, but also in the future months. We're going to have inflation information come out this week and next week for the consumer side and the producer side or wholesalers, and both are expected to be extremely high. That is, of course, not good news I want to deliver, but I'm saying that to you so you can kind of brace yourself for what is to come. Anything that is high on inflation side on the wholesale part of our economy eventually trickles into the consumer side. So last month, wholesale inflation year over year was measured at 9%. Well, if the consumer inflation was only at like 5.7, but the wholesale has continued to increase, well, then we should expect that our consumer side is going to increase as well. So in short, that just means that the things you buy regularly are going to continue to get a little bit more expensive. So we're trying to have real and honest conversations with everybody about what we see coming, why it's coming, what you can do about it, and then how does your house fit into that picture. Although this is a little bit of an extended Monday Mortgage Minute, I really wanted to take time today to kind of just shed light on all the moving parts, what's happening, and then encourage you to have conversations with your qualified professionals. Call your loan officer here at Mortgage Heroes and talk to them candidly about your financial situation, what's going on, what's working, what the pressure points are, what's not working. So if there's a solution connected to your mortgage, we can help you figure that out. Talk to your realtor. If you don't know who your realtor was, or you are in need of talking to someone who can discuss what your options are for keeping your house, selling your house, let us know so we can make sure that based on where you're at, the type of sale you need to do, we can connect you to the right people who can advise you on all of the consequences, good and bad, of the decisions you feel like you might be facing. I know that a lot of this might bring some reality and some hesitancy to talk about it, especially if there is you're feeling a difficulty or a strain or a challenge in your finances right now. Please don't feel alone. You're not on an island all by yourself. We would love to talk to you and identify what things you can be doing right now to better your financial situation. And of course, we have to weigh in on that from the mortgage side of the conversation, but we've already crossed that with you at some point. You know, if you're our past customer and you're our past client, you know, we've already discussed finances with you before. We've already talked about credit. We've already addressed debt and income. So, you know, we're in a unique position to be able to, you know, recall those things, but also, you know, speak into what it is you might need to consider for the next short period of time, or even the next couple of, you know, years, 3 to 5 years looking ahead. And if there's a decision that you need to make right now in order to better your situation for what's to come. So thank you so much for hanging in for a little bit of a longer Monday Mortgage Minute this week. As always, please feel free to share this video with people you know, like, and trust, people you work with, your family, people who need to know what is going on in real estate and mortgage in 2022. Thank you so much for trusting us and trusting us with them as well. We will see you next week. If you have any questions before next week's video, make sure you leave a comment, send a DM, or contact your loan officer so we can help you right away in all of this turmoil and turbulence is happening very quickly. We want to make sure that you stay in contact with us and we're delivering back to you all the information you need to know to win in real estate and mortgage in 2022. Thanks for watching. We'll see you again next week.